Welcome, ladies and gentlemen. It is Rob. Welcome to the Market Intelligence Report for Tuesday, not Monday, holiday time. Tuesday, September 6, 2022. Hope you're having a great day. Hope it was a good trading day for you. Hope the week has been well for you as well. Markets are closed up. I'm just waiting on the S&P 500 to finalize on Omega charts. But we've got the S&P closed now at 39.24 quarter. You can see this green box on the far right side. So on Omega charts, we're at 39.22 and a half, so quarter. So about 2 points off from the final close. But no matter what, we closed in a bearish bias today. All right, you really have to take the full understanding of what's going on in the market, of what's going on the fibs and the chart and so forth. You need that full picture to grasp what's happening here. We had the V bottom, dreaded box of neutrality, which matched up with the one that was back here, look left. Right, we moved up. We got a V top, good V top. We broke below the 8 here, the 21 here. We vacillated a little bit. We popped up, and right there, traders like, yes, we're going back up. I know tons of people throwing big money at the market, trying to get in early and kerplunk, right? Nope, pop my head above the trees. Nothing else to see up here. I guess I'll go back down hard the next day, no less, right? On this day. And then we've been down ever since. And as we bring it in a little bit more, and we look at what actually transpired, this candle, that big candle crossing over, brought the 8 crossing down below the 21. It put us in bearish territory, not true bear, but bearish enough to take a directional trade, right? This next candle got a continuation move down on the 8, as did here, and this candle here is where our crossover took place. Now, the 8 is the lowest moving average, which definitely gives me the ability to say, yes, I can take some swing trades, bearish swing trades. And then we got that pop yesterday. And that was the, it looks like maybe we're going to go back up. I got questions on Benzinga yesterday but is this if I want to get in early, is this the place? And I said, there's no supporting reason to say, we go up from here. That doesn't mean it can't bounce. But there's nothing that says this is the place for it to happen. Today, the gap up, and I could see all those people that asked me those questions yesterday going, I should have bought. I should have bought when I wanted to yesterday. I'm in now. And we get this continuation push up, and what happens? If we really bring it in, might make that a little bit bigger even. We pushed up. Now, the 8 wasn't all the way down where it is now until we closed, right? But we pushed up with a confluence of what closes now as the 8 and the fib line, which is the 50 percentile line, okay? And we pushed up into that area. We pushed up through the 4,000. That was the key level. Why? No rhyme or reason. There's nothing to it except, it's that really big whole number, the 4,000. Every 100-point level is critical. You see these dot dash lines all over my screen on the S&P. They're 100 points, 3,900, 4,000, 41, 42, and so forth, right? Is 4,000 important? Yes, because it's a 100-point level, not because it's 1,000. It's because it matches that 100-point level. We failed with a vengeance. If we look at the intraday chart today, right, that failure took place noonish, 10 after, quarter after. So we broke that 4,000 now on the 1225 candle. And that's where we saw the market just tank. And it continued that way for the rest of the day. Where we started the day out down a little bit in pre-market, we gapped up, we pulled back a little, right over here. We ran, and then we went sideways. And then we gave back and gave back and gave back and gave back to the point that we are roughly 50 points to the downside on the S&P 500 today. That's how harsh of a move this was today for the market. So what's happened now? What are we looking for? Guys, right now, when we look at the candlesticks we have here, right, we had 2 wicks come right down near that 3,900 level. I think that 3,900, because of the test, 2 days in a row, that is the level. We've got to either hold that level and bounce, break above, close above the purple line, that 0.618. If we fail and break that 3,900, it's Katie bar the doors. I am all over bearish positions if that's the case. I did a bunch of bearish trades today. Apple, Amazon. I did covered calls today on stocks that I own, like Amazon. Why wouldn't I? I mean, I picked up 30 cents for the day on Amazon. It expired worthless, right? I sold next week at $1.40, I think it was. $1.50, $1.40, 50, something like that. And Monday doesn't even count. Monday's a freebie because the market's closed, right? So right now we're looking at that 3,900 level as the critical level for us. We've got to maintain that level and bounce to start getting some semblance of strength back in, at least support. If we don't, 3,900 breaking it, we're looking at 3,864, then 3,800, and then 3,722 is our next downside target. And that's the full one. That would give us a 100% retracement in the market if we make it back down there. All right, so there you have it, ladies and gentlemen. Have a great holiday weekend. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, and I will see you next week at our next update. Bye for now. Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I've put together just for you.